Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Abbreviated Saturday version of the Forex Factory calendar. Do keep in mind that our previous call was a rather huge attendance for, I guess, a big push with the brand new back office. There's a whole new cover coming off of a bunch of stuff that everybody's getting to unveil. And quite frankly, the tech team and Susan, our marketing director, really deserve most of the credit for this. She has worked tirelessly on this stuff, and it's certainly great to see. So hats off to the team on that. So if you're just joining us, welcome. Today is the 12th of June. Let me just double check. We have a proper screen share going on here. We should be good. The Q&A window is open. The chat window is open. I'll talk a little bit about a couple of different subjects today. So if you know of your guys on your team that cannot be on this call for any reason, the recording obviously will be finished typically about a day. This is one I would absolutely make sure your team takes a look at, because we're going to talk a little bit about brokers. Okay. Now remember, we can't by law, even though technically I could because I'm an advisor registered to do, but recommend brokers. I try to talk just generically about the differences between the brokers. I've shot a number of videos on this. They're up in obviously the AP Live back office, and I'll talk a little bit more about it today as well. But let's go ahead and get into June 13th through the 19th in terms of Forex news related events. So I'll typically go into this, and for some of our new folks, I uncheck the boxes. I only really care about the red folder events. Occasionally, you want to see the gray folder events because it typically will tell you about holidays. If you ever want to sync this, you just click the button here and sync the calendars. You can see that I'm synced. You could choose whatever time zone you want. In this particular case, I'll just save them to Eastern time, and then you go back and it's completely synced. Do make sure these times will differ depending upon, well, most people will look at these calendars based on New York time. Okay, so essentially Eastern Standard, which is what you're seeing here. So you always want to make sure you move the date forward to the week you're looking at. So starting next week, a bank holiday tomorrow. Not sure what banks really ever open on Sunday, but I guess that's the case in Aussie land. Nothing on Monday. Tuesday, we've got Governor Bailey speaking, so I would expect some increased volatility, GBP pairs. Be careful on accepting any trades related to these around this period of time, typically an hour to 2 hours before and or after is what the recommended pause time is between myself and or all the developers out there and most people in trading land. Because let's face it, if things are crazy around news releases, your statistical win rates are lower. And that's really the bottom line. So on Wednesday, we've got a bunch of stuff coming out from the SOMC. We've got a press conference. We've got, this is certainly a time I would not want to be trading around it. Quite frankly, it's a little bit later in the day normally. So usually 2 p.m. Easterns that the Forex markets calmed down because most of the European or Asian sessions are closed. So, but we do have the more Aussie stuff on Wednesday, unemployment rate. Thursday, the monetary policies. There's really big news events all week. I probably just would not be accepting any MAV related trades and or pausing the software, which you can do around these events, especially if you have variable. So that being said, let's go into, so I have the chat window open. And what if you guys could please in the chat window I have a number of modules that I'm putting together for our huge event towards the end of July, the Ride the Wave event in Orlando. Going to be up speaking on stage, probably a couple of different times. We're going to get everything ironed out. And I want to know from you guys, and it has to be sort of on the subject of my role, right? So essentially my role as risk manager, technical analysis, that kind of stuff, mostly big picture stuff. What would you guys like to see? So I'll talk more about this as we go forward, but I've got a couple of modules I'm putting together and/or segments that I'm going to present up on stage. Finally, get my damn laser pointer back so I can talk as I used to many times in the past with my pointer. What subjects you'd like to see? What related to it on any of this, and if I have sort of a growing chorus of what people want to see me talk about, I can hone down the presentation, maybe add in a few extra pieces that the subscribers are looking for. So, daily chart, US dollar currency index DXY. So we're looking at a daily chart. I typically like to start each one of these candles represents a single day green up, red down. And it represents a candlestick analysis or a most important price action component of technical analysis. So let me take a look at this is sort of a zoomed in subset of what's taken place the last couple of days. So we've formed over the last 6 days some new squeeze zones, which is nothing more than a support and or resistance line. That's an algorithm Desan built that I use quite heavily now. We have a fairly tight area of almost a 60-cent spread in this DXY index. And I think now we've poked our heads above it, came back again down a little bit underneath, probably looking a little bit less that we're going to go back down unless some big some big global news event comes out monetary supply wise or central bank wise and must crash down through this. Certainly any signs that all our nutcase policymakers in DC are actually going to get something together, put us more in debt, which case will reduce the underlying currency value of the dollar and continue it to potentially break down this whole 89 area that I've been talking about. It's looking like we are probably going to crash through. But it seems to me like we're going to be spending some more time building a base. Okay, if that in fact is the case, this bodes considerably more in the benefit of a MAV-based or any kind of martingale-based trading system, right? Which is what Gearbox is and a number of our other pieces of software. By the way, I've actually seen some sniper FX books for Gearbox. So shout out to Tyler and the team getting things improved there. I've seen some pretty decent and very consistent performance in that over the last 6 months. Not going to set the world on fire, but by statistical odds, I should say statistical metrics using the institutional investors as I mostly act in my daytime job capacity, the numbers are great relative to just overall performance of, a typical stock or a mutual fund or an ETF. Good stuff. So that's kind of my thoughts on DXY. What does this mean for Euro USD? So again, looking at where we've been, and I'm going to switch to a weekly chart. Set the scale so we can see where we've been since the bottom of the pandemic down here and coming up and just sort of bouncing along. It means that more than likely, I don't see us cracking this high anytime soon. Same thing could be said about a little bit lesser degree of confidence that we're going to be spending time balancing here at the top because these charts look like, from a weekly perspective, different than, but with the same tight range, and this looks to be coiling. So I think it probably does not have, could be wrong, it probably does not have its own sort of ability to pour out and blast off higher unless something comes out very positive for the UK, right? Keep that in mind. GBP CAD. Actually, let me look at one other item. Yeah, so back to weekly. This is the bigger picture for GBP CAD. You can see the very defined zones. This thing has really paid attention to these support and resistance squeeze zones lines over a weekly perspective. And if you drop back to the daily, another coiling type of situation, or maybe just a tight range where balancing inside, essentially price auctioning between highs and lows between all of this. Euro JPY, just a real quick look at this. Balancing, notice just in the last couple of days, some squeeze zone support and resistance lines have formed, which may cap upside movement. I mean, all in all, no surprise. We've been talking about this ad nauseum over the last 6+ months. Just general weakness in Japanese related sides of these majors. Expect that to continue, essentially our trend up at this point. CAD CHF, let's look at the weekly chart here. Seems to be consolidating the gains off of the beginning of the year. This looks like the 75-ish area is capping our upside movement for now. I don't really have one way or the other. Again, good for accepting trades from systems on both sides of the equation. GBP CHF, same thing. Tight range. You guys know the story if you've been following along. GBP JPY, same thing. Tight range. US CAD. Now notice with this one here, we've been spending some time on the edge of the cliff, but this is our first shot. No surprise, right? Dollar strengthening up generally in terms of other majors. We poked our head above what was now. I don't know how long this line's been here. I think it formed 4 or 5 days ago, if I'm not mistaken. We poked above it and pushed back. So it's just looks like we could be coiling again, provided the dollar does something. And who knows, maybe some of this policy statements coming out on Wednesday from our US-based policymakers from the Fed, Jerome Powell and company, are going to be inflationary related, right? It's that transitory inflationary statement that keeps coming out of their policy discussions, and they don't see it, but if they do, they're going to have to move, and that's going to send the bond markets obviously spinning, which will spin into the currency markets and fall over into other stuff, including equities and commodities. So this may be one of the more important reserve meetings to pay attention, not necessarily from a stay out of the way of the volatility, but as a US resident, just getting a feel for will there be a change, as there has been some dissension among the troops, if you will, and the Federal Reserve governors of this inflation thing. So they've sort of broken away from Powell in some separate meetings, and markets caught a whiff of, hey, if things are starting to creep up in inflation. Certainly, if you look at a commodities chart, which is very important, surprisingly, to many people. Let's take a look at that. Movements in commodities are pretty important when they are feared inflationary related. I'll show you guys what I'm talking about. This is the dashboard I show a lot. Now, we've had pullbacks on a lot of stuff, but anything building related, it's been on a tear. So look at the chart of lumber. Actually, let me just go to a daily here. Just take a look at let's take a look at a daily first. Now we've had just an absolute rip. It's probably one of the first times in a long time, even though this probably doesn't seem related to currencies, it's really related to just understanding a risk of an exacerbated movement that we've seen. Well, we were probably almost a 3 standard deviation up here, which is rare. So there's almost always, especially on something as long as a daily or hell, even the weekly chart, look how ridiculous this move was, that you knew we'd have to be coming back down to earth, right? So the rubber band got super stretched, damn near broke in this case, and now it's starting to snap back or revert back to the mean. Tough thing to catch. Yeah, but the thing I like about this is you can go to the bottom of this, just get a quick shot. Most of this is USD related charts, so in its relation to the dollar, right? And you can see kind of where everything's trading, whether there's correlations. Obviously, these are going to be completely inversely correlated, which essentially just means they're doing the opposite of each other, obviously. But general strength in pound, definitely strength in Canadian, but noting like the pound is leveled off in terms of building or basing or just spending some time trading sideways, if you will, in both of these cases. And then in relation to both of the Aussie land charts looking very similar, actually. Not a lot of just chop, if you will, not a lot really sort of coming out of this as far as strategy that we could set related to the bigger picture. So jumping back on to dollar JPY, again, balancing. Let's make sure we do the daily chart first. Just essentially trading sideways in a tighter range. The tighter the range gets, the more we have the potential to coil to break out, in many cases with a protracted move. So dollar Swiss defined downtrend has probably changed into our little sideways trade here, range tightening up. Aussie USD, dollar, daily chart, same thing. Very defined ranges and really paying homage, if you will, to the trading up against the top, down to the bottom, and just trading sideways along that period of time, thus giving all reversion to the mean or the center point. And many of the softwares that are martingale based to trade this are going to go back down and do that. Aussie CAD, go to the monthly. Actually, let me start on a weekly here. Still hanging down near real big long-term support over the last almost year. Is that right? Broke up into that range in June. Yeah. So we're spending a year here. Market's calming down. No surprise on crazy ass events over the course of the last year. Okay, so here's Neo. Neo trades other stuff. Most it's just Singapore dollar related. Tight range from a weekly perspective. But notice again, just looking at the daily chart, right hanging on the edge of the cliff down here. Be curious to see, and I don't know the answer to this question, I'm just sort of spitballing here, but I'd be curious to see what happens if we broke this line underneath. Will we just rip back up? We've had a lot of doji days here too. That would have me concerned about hanging on the edge, but it's been fairly predictable. Gold, spot market. We've had a big move and now we're consolidating that move, to be expected, right? We could spend considerably more time in this area. So it gets tougher to trade the chop, especially if you are taking arrow-based trades, as I know many do on gold. So just be careful that the continued chop I've talked about could go on for a period of time. But at your, obviously all dollar related stuff, all central banker, this is just super sensitive to both of those markets from a correlation perspective. The bond analysis I was just asked about. Let's take a look at so we're on the dailies here. First, looking at just the top of the screen here, you can focus on 30-year. These are US from the long bond here to the other notes, 2 through 10 year. Haven't had anything real crazy. really a lot of noise, kind of frankly, in these charts. You're going to have to go to a weekly on these to just see kind of where we are as far as analysis wise. So moving into 21, you had a big sell-off in, and keep in mind, bonds, the price of the bond is completely inversely correlated with the yield. So when bond prices go down, yields go up, right? Because the price of the bond falls. Just normal macroeconomics, yields going to go up. This is the problem many investors get caught in. If you have a 401k or you have some sort of 403b or whatever the retirement plan it is, or just simple IRA or maybe other countries' retirement plans. The problem is that if you get into a bond fund, it isn't necessarily without risk. That bond fund can drop in value. And look how, if you put into the end of the year, what the movement's down, obviously something like the 30 years can be more volatile. I mean, look generally how the price has fallen in this. If you invested in that bond fund right here, you're off over 10% in the fund. Yes, you're getting income off it, albeit barely 2%. Then our price is down 10, 15% on you. So there is not zero risk in bonds, as many indicate, or a lot of financial advisors will put their clients' allocations in bond funds or ETFs, or in some cases even owning U.S. Treasuries directly with a Treasury Direct account. We don't follow that at First Down Financial. We believe in being in a conservative area, but we do not use bonds. We use a zero risk area for that type of allocation for clients. And I usually suggest everybody do the same. Now, unless you look at a monthly chart is a great example, unless it's 07, right? And you're getting into these bond funds, just price in general has gone up a bunch on these over a period of time. So if that answers some of your bond analysis, just speaking, just generically, I try not to get too deep into it, but we certainly can look at this 7 to 10 year index. I usually look at weeklies on stuff like this so I can get a better picture of what's going on. A lot of noise on the daily chart, but you can see that sell-off I talked about. This is a big area of support, long-term, no surprise. Cup with handle breakout. See that right here? Boom. And it rallied. Now, in all fairness, this was the pandemic right in this area, so not a ton can be read from that, but the key thing really is just understanding pattern movements relative to the asset class that you're studying. TLT, this is the 20 plus, so these are iShares ETFs. They trade just like bonds, more a little of a diverse basket of treasury-based holdings in most cases. Sometimes they'll juice these portfolios with a little bit of higher yield stuff, but typically that's not the case with treasury-based ETFs. They're usually pretty clean. Bitcoin, again, guys, there's tons of other cryptos out there. You don't have to just trade this piece of crap. But at some point, this looks like to me, back on the daily chart, this thing's going to be going to, we're looking essentially the first stop is the first breakout here, which is right around 20K. See these dojis on these weeklies? Two perfect dojis have formed on the weekly. And this is Bitcoin. So I wanted you guys to see this, because what this tells you is these are both 2 weeks now. Hell, even arguably 3 with this sort of spinning top formation 3 weeks ago. But from a weekly candle perspective, these are indecision candles. And typically they will follow in the trend of the current movement, which is down. So maybe we have a fast flush to 20K. Now, in which case I will, for the first time in over a year, may, depending on how ugly the charts look into this area, may decide to take a very small position with the full understanding that it more than likely is going to, especially if we move in that area fast, could get cut in half again from that point. So I'm actually, one of the modules I'm going to talk about in July, hopefully this will motivate everybody to get the ticket spot before the prices go much, much higher, and or get on a plane and get here, check your embassy, talk to whoever you need to do to get a visa to get in, so to speak. I know Auvoria is signing visas to come over work related, which I thought was a really cool move on the company's part. So look into that. If you guys have any questions, don't ask me because I don't know the answers. Just stuff I heard through the grapevine in one of the board meetings. In any case, that's Bitcoin. Ethereum, let's go back to a daily on this one. Kind of looking from a daily perspective, see the flags forming. We didn't really break lower, it just came right back up. But we're just essentially balancing out, trading in a sideways type of movement. If you look at the weekly on it, okay, you don't have candle formations quite like the last three I showed you. So they look a little different, but it is quite indecisive at this point. But ideally, entry points for this would be right around 800, which falls right in line with many cryptos that have completely torn up movement over the last 4 or 5 years, getting cut, 60, 70, in some cases up to 90% off their high. That's when you reach buy points. So I have a couple of clients that I brought in, retired sports guys to our company, live in Florida where I'm moving to, and they're all, just chasing price around all the time. And most of these guys just constantly getting clobbered on that. So I thought I'd do just a little bit of movement into a slide I dug up from a long time ago. Let me make sure I wanted to. You guys want me to take a look at anything else? Just let me know. But I want to pop this slide in real quick. So this is a slide that I had put together a long time ago I've been doing risk management webinars for over a decade now. I thought this one was interesting because it looks at it a little bit different. So for those of you who can't see the screen, it just basically says the process of identification, analysis, and either acceptance or mitigation of uncertainty in trade decision making, right? So essentially risk management occurs anytime a trader analyzes and attempts to quantify the potential for loss in an investment and then takes the appropriate action or inaction, right? Sitting in cash is a position, right? Because it's zero, given their investment objectives and risk tolerance. So inadequate risk management, no surprise, can result in severe consequences in what I like to call blown out accounts. So simply put, risk management two-step process, determining what risks exist in a trade, then handling those risks in a way best suited to your trade outcome. So risk management occurs everywhere in the financial world, and quite frankly, everywhere, because it is pervasive in every human's life. So it, essentially when you're an investor, even if you're buying low risk government bonds or, more risky corporate debt or even junk bonds, right? So you're doing risk management and an analysis of all of that stuff. So when a fund manager, and you can see some of the other stuff, they're using exposure, currency derivatives to hedge other parts of the portfolio. So on the opposite side of that, risk management is the same thing when any bank or loan type organization performs a credit check for any type of lending that is done to consumer, being retail and or institutional lending. So just as a side note, the other thing I've sort of noticed in the last couple of weeks is in most of these rooms, because occasionally I'll just peel through the different rooms. I don't know if you guys heard, we really essentially were fed up with all the delays from Killian, and so we decided to blow Stratimus out. And I don't know, maybe can get our hands on that algo in some other form. I don't know the answer to that, but maybe we can tweak it ourselves and re-release it or something like that. But I still think that with 10 plus products in the pipeline, I've seen a few of them, and or new trading rooms that we're going to be coming out with it. The key focus is on having some sort of semi or automated system trading for you, depending upon where you live in the world. But we're more limited in the US, which certainly makes the argument to learn to trade in a manual or discretionary capacity. So I'm going to talk a little about that at the event as well, with what I consider to be, which is just a simple risk management discussion, a 3-to-1 risk reward or higher. So I'll talk a little about that because it really is the holy grail in trading, and it is exceptionally simple concept to present. So I'll talk some more about that. So that's it. Stay tuned on Tuesday where I do a little bit of a deeper dive into A versus B booking. So just understanding your brokers. I actually went a little long today, so I don't really have time to talk about it right now. So I got to take off. We have a tea time here, me and my son. But we'll talk a little bit on Tuesday about A versus B booking with your brokers. And I'm actually going to show you guys, as I've done on some of the videos in the AP Live back office, of how to look and see whether or not your broker's gaming against you. So on that note, I will bid everybody a fantastic weekend. Thank you for all of the support. You guys have been great. I always get constant positive messages here and there. So as we continue to drag the concept of risk management, hopefully completely drilled into everybody's head that is a subscriber to AP, which is ultimately one of the most important things that anybody can do. If I can pound in the concept of risk management, and as annoying as my droning on about this seems to be, eventually it's going to sink in, and you guys will make a lot more money, which is really the bottom line. So with that being said, guys, have a great week. Be kind to each other.